How to start a business in California. One interesting fact about California is if it were a sovereign state, it would have the fifth largest economy in the world. Another fact that you need to know is that California has a higher tax burden than any other state. There's only so much you can learn by yourself before the nuances of the subject start really mattering and begin having a significant effect. Consulting with a professional financial advisor before you open will help you avoid ending up in a very expensive scenario later, which will become quite clear later on. Since California has the highest tax burden in the country, knowing how to start a business in California begins with thoroughly understanding California's tax obligations. At some point, you're going to need to register your business in California. This requires deciding upon a business structure for your company. So, what is a business structure? A business structure defines the relationship between you, the business, and the state. Every business is legally obligated to have a business structure, and the reason for this is that every individual and business must pay taxes. There are a few different business structures, but the two most common ones for small businesses are sole proprietorship and an LLC, or a limited liability company. So, what's a sole proprietorship? A sole proprietorship is a company that has one owner, and the state treats both the company and the owner as the same entity. It's the simplest and easiest to open. However, this structure becomes problematic in circumstances of paying debts and court proceedings. The owner is held personally responsible, putting his personal assets at risk. The second structure is called a limited liability company, or LLC. This is a relationship or business structure where the owner and the business are considered two separate entities. The advantage of this structure is that, unlike the sole proprietorship structure, the owner and their assets are protected from any circumstances where being sued might occur or being sought after for debt repayment. So, what's this got to do with California state taxes? In simple terms, and as we said, every individual and business must pay tax. But if you own a business and this business makes money and, in addition, also pays your salary, would the owner and the business both have to pay taxes? In the case of the sole proprietor structure, where the business and the owner are considered one entity, the answer is no. The owner pays tax only once. But what about an LLC, or limited liability company, where the owner and the business are considered two separate entities? Does the business and, in addition, the owner both pay taxes? Logic would dictate that yes, both the owner and the business would both need to pay taxes, which would end up being quite a considerable amount of money. However, in other states, taxation on both the salary of a business owner and the business itself is resolved by something called a pass-through clause. A pass-through clause applies specifically to an LLC, or limited liability company, where all the profits from the business are passed through to the owner. The owner then pays tax only once on the amount he received from the business. However, regarding taxes in California, this pass-through clause is circumvented by the state by requiring every business to pay a fee regardless if it has a pass-through clause or not, and the amount of this fee is determined by how much that business makes. This explains, to a certain extent, why California has the highest tax burden out of every other state, and it also explains why it's so important to consult with a financial expert when creating a business. Establishing your business as an LLC and having to pay the state twice, when you could have established your business as a sole proprietorship and pay taxes only once, is not a mistake you want to be picking up the pieces from later. In addition, California requires you to pay taxes for any business that's registered in another state if you decide to reside in California itself. Also, California, as a form of relief, has many tax incentives and tax credit reductions for new and existing businesses, especially when it comes to green energy. These can significantly reduce your tax burden, but they are many, and so again, it becomes very clear that when knowing how to start a business in California, acquiring a trusted financial expert from the beginning is not only vital, but also the very first step. You can find out more about this subject by clicking on the link in the description below, or find out about any other subject by visiting www.finimpact.com.